Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about some of the best stocks to buy on the stock market right now. So we're going to be going over the top 3 technology stocks to buy under $20, which makes these companies very affordable to own a portion of them. So we're going to be talking about SoFi Technologies, Palantir Technologies, and Amplitude. Now, with that being said, I do want to make sure you are all doing your own research to make sure these companies actually fit into your personal investment goals. Your goals could be different than my goals. I am just here to point you to very good stocks for you to do your own research to determine if you should invest into these companies and if they will make a good fit into your portfolio. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your favorite stocks down below, or if you like Palantir Technologies, SoFi Technologies, or Amplitude, and without further ado, let's jump right into today's video. So I'm sure we're all familiar with Amazon, ticker symbol AMZN, which is an absolute e-commerce giant, but they do much more than that. Right now, Amazon stock is trading at around $3,000 per share, but at one point back in the early 2000s, Amazon was actually trading for less than $10 per share, and the reason for this is that the stock price plummeted after the dot-com bubble bursted, and this allowed investors to buy many cheap companies because of the downtrend. Most of these dot-com bubble companies actually went out of business. However, for the ones that went on, they became absolute monster companies such as Amazon. And to me, right now, there are a few Amazons out there right now, so to speak, that we can buy at a very cheap valuation, which could eventually turn into a mega company for us, giving us fantastic gains and a great growth trajectory for our stock price appreciation. So we're going to be going over Palantir, SoFi, and Amplitude, all of which are trading below $20 per share, which is very affordable. Now, for some of the other stocks that I talk about on this channel, such as Google, Amazon, Apple, and a couple others, I would encourage you to check out a brokerage where you have access to fractional shares or fractional investing. So for Amazon, if you don't have $3,000, you might not be able to invest into the stock. However, with fractional investing, you can invest in Amazon for as little as $1. So if you want brokerages like that, I have links to Robinhood and Webull down below in the description box. So feel free to check those out and use those links to sign up and invest your first $100 into any of these companies, and you will also get a free stock for doing that. But without further ado, let's go over our first company, which is going to be SoFi Technologies, ticker symbol SOFI. So right now, the SoFi stock price trades for around $10 per share, while the low-end analyst price target for the next 12 months is also $10 per share. However, the average price consensus among analysts over the next 12 months says that SoFi stock could appreciate to at least $16 per share, while the high-end bullish analysts actually say that SoFi Technologies is worth $22 per share. If you didn't know, SoFi Technologies is a fintech company or a financial technology company that is targeting the massive banking industry, which is very old, and SoFi is using their technology to innovate and change the banking system that we know and love. And SoFi is doing this by offering very competitive interest rates, and they just do business differently than many major banks, giving investors as well as their customers access to fantastic financial services. Down below, you can see that their current stock price, originally when they were listed on the public stock market, it absolutely exploded in price. However, we saw a long period of consolidation before many macroeconomic factors caused the SOFI stock price to actually downtrend. But in my opinion, now is the time to actually look into these stocks to see if they are a good buying opportunity for you and your personal portfolio, because just like how we saw in Amazon, how they exploded initially and then fell all the way down to just $10 per share, that's exactly what we are seeing with many fantastic growth companies in the stock market right now. They had a fantastic growth trajectory, they stabilized their overall stock price. However, due to a multitude of macroeconomic factors and geopolitical tension, the stock prices have fallen, which to me is a fantastic buying opportunity because our favorite stocks are trading at a discount right now. So that is my justification to look further into SoFi Technologies. I personally am invested into SoFi Technologies. However, if you know me, I have a personal rule that I never allocate more than 5% of my portfolio to a single company, and right now SoFi Technologies makes up around 4% of my portfolio right now, so I am excited to see this company grow. But let's talk more about this company. The company is most notably known for their quote quote-unquote super app, which is how the Motley Fool author actually refers to their app. They have an all-in-one inclusive app that offers a variety of financial services that basically anyone would need in terms of finance. They have money transfers, various ways to invest into stocks and cryptocurrencies, even pre-IPO companies. They have borrowing, banking, savings accounts, credit cards, debit cards, and this is all inclusive in a single smartphone app. So this is very convenient for the majority of their users. Also, SoFi Technologies has had 3 major acquisitions recently, the first one being their Galileo platform, which is a major technology platform that will both cut cost and generate revenues for SoFi Technologies, on top of their recent Technisys acquisition, which is also going to synergistically work with their Galileo platform to lower costs and increase overall revenue. SoFi is also now regarded as a national bank because they have successfully initiated their bank charter, which is absolutely phenomenal, which allows them to further cut costs, generate more revenue, and act as their own bank. I also want to point out that recently, in the last year, SoFi Technologies generated around $1 billion worth of revenue for the entire year of 2021. However, their current market cap is only trading at $8.5 billion, so although you are paying a slight premium of just over 8 times their PS ratio, this company can more than grow into that market capitalization right now, and this is a good time to buy SoFi Technologies in my personal opinion, because it's already trading at a phenomenal discount. Even analysts believe that it's trading at a decent discount right now. So overall, SoFi Technologies is growing their revenues very rapidly. Their market cap is rather low, and I do believe that they can grow into their current valuation. And that's basically what we want from a good growth stock. We want to buy the growth stock at a discount, which is what it's trading at right now. The current fundamentals and their financials and their $1 billion worth of revenue that they brought in for 2021 is not too disconnected from their current market capitalization of around $8.5 billion, and I believe in the future, with their current CAGR and compounding annual growth rate for their revenues, that they will eventually be able to achieve and surpass $8.5 billion per year. So that's why I am investing into the company now, to achieve the benefits that I could get from this company within the next 5 to 10 years, because to me this is a very good long-term holding opportunity. However, if you want more stable companies, feel free to invest into companies like T. Rowe Price, Bank of America, and even JP Morgan. But as of right now, I do like SoFi Technologies, and it's probably my favorite investment out of these 3 companies that I am mentioning right now. However, a close runner-up is going to be Palantir Technologies, ticker symbol PLTR, which I report a lot on because you all seem to love the Palantir videos. So if you continuously want me to report on Palantir Technologies, smash that like button and comment down below, and I will do that all for you. Like SoFi Technologies before, Palantir Technologies makes up between 3 to 4% of my portfolio. However, I am more bullish on SoFi Technologies right now, even though I do think that Palantir Technologies has a great growth runway in the future, but we'll get into more details surrounding this company in a minute. Currently, the PLTR stock price trades for around $14, which is a fantastic recovery because originally it was trading at just above $9, and then the stock price has appreciated back up to $14. The low-end analyst price target for the next 12 months for the year of 2022 is $9 per share. The average price consensus is $15 per share, so according to the average price consensus, there's not much upside left in the PLTR stock. However, the most bullish price prediction for Palantir Technologies goes as high as $25, and Morningstar, which is a respected financial institution, actually says that the fair value price for the PLTR stock is actually around $30 per share. So it really depends on how we justify our valuation for Palantir Technologies and how we calculate their fair value or their current value. And I've done a plethora of videos on that. It has ranged anywhere from $7 all the way up to $25 per share. So it really depends on how you view Palantir Technologies. Now let's talk about what Palantir Technologies does. Well, I like to start off with a quote from a United Kingdom mathematician that said that data is the new oil, and I think that this is an extremely good quote. Data is extremely valuable, and the companies of the future are heavily going to rely on their data to make future decisions. And lucky for Palantir, Palantir, Palantir is a big data and analytics company that serves both government clients as well as commercial enterprises due to their two main software platforms being Foundry for their commercial clients and Gotham for their government agencies. And these platforms allows their clients to analyze large pools and lakes of data to discover trends and even help human analysis to determine what is the best course of action for the overall company. Right now, just like we have seen with SoFi Technologies, we see from when Palantir DPO'd on the public stock market, they absolutely surged in price, and then we saw a good period of consolidation. However, recently, due to political turmoil, geopolitical tensions, and macroeconomic factors, we see that the stock price has traded down and trended down very aggressively, which to me, just like in our example for Amazon, this is a good buying opportunity in my personal opinion. But again, always make sure to do your own research. This is not financial advice. I'm just trying to point out some of the companies that I am looking into that I think could be a good buying opportunity depending on your strategy and your overall portfolio. I also want to mention that investing into single stocks are very risky, which is why the majority of my wealth has been built by investing into ETFs such as VTI, VOO, and QQQ. And if you want to check other ETFs that I have invested into, I just posted 2 videos about the best ETFs to invest into, so feel free to check those videos out as well. But in terms of Palantir Technologies, they are trading at a drastic discount compared to what the stock price was originally trading at after they surged. Palantir has been doing business with the United States government for years. They have had contracts with the CIA, FBI, Homeland Security, and many defense agencies. They are also recently expanding into the private sector and the commercial space, which is what makes me bullish on Palantir Technologies, because I believe that their commercial space and their commercial sector will outpace the revenue generation that they are currently achieving with their government contracts. Now, although the government contracts are going to give them stable revenue, I believe the true growth is going to come from their commercial segment, and we have already seen good hints of this recently, because during last year, Palantir's commercial clients actually tripled, which invigorated their overall revenue growth rate, which gives great evidence for my initial thesis that their commercial revenues are going to overtake their government revenues, and eventually their commercial segment is going to reach profitability, which is going to make the overall company profitable. They also have very solid revenue growth. Their management is currently forecasting and projecting a 30% CAGR, or compounding annual growth rate, for their revenues from now until 2025. Just last year, they brought in around $1.5 billion worth of revenue. However, some investors are scared because their PS ratio is very high, because currently their market cap is around $28 billion, which does signify that we are paying a premium for this company, even more so than what we would be paying for SoFi when we compare their revenues to their market cap, because Palantir's revenue to market cap is a much larger expanse. So please keep that in mind, and there is no guarantee that the stock price will continue to appreciate. It could most certainly fall lower during the times of market uncertainty, so please be aware of that. However, over the long term, I believe that the mathematician is correct when he said that data is the new oil, and because companies like Snowflake and Palantir, and even Amplitude to a degree, can process this information, which is going to be absolutely fantastic for the company and the overall stock price. I also really like Palantir's business model. They have a multi-phase selling business model that generates fantastic revenue, and I have done substantial research and many videos about their business model, so if you want, feel free to go and check those out. But I really like Palantir because their technology works, it's extremely secure, and government agencies as well as commercial enterprises absolutely love them, and their software is sticky. So once they obtain clients, the client is actually incentivized to keep Palantir and not change from one provider of data analytics to another, because Palantir's technology is just so good. So it's really good that they have a high retention rate for their customers, because really they don't have a lot of customers, especially compared to other data analytics companies like Snowflake. But with that being said, I do want to keep Palantir Technologies on your radar, because this company could grow into its valuation in the next 10 years, and then from then on, it's going to be literally pure profit. So if you are not willing to hold the PLTR stock for the long term, then this stock is probably not for you, and you could be better off investing into SoFi Technologies or even another stock. Lastly, we have Amplitude, ticker symbol AMPL, which currently trades for around $19 per share, which is a huge discount compared compared to their low-end analyst price prediction for the next 12 months, which is $32 per share. Their average analyst price prediction is $36, while their high-end bullish price prediction for the next year is $40 per share. So if the most bullish analyst is right about this company, you could literally double your money in the span of 12 months, which would outpace the majority of stocks on the stock market right now. If you didn't know, Amplitude is a self-proclaimed pioneer of digital optimization, and it drives how companies make decisions. And right now, the company is receiving fantastic business from around 1,597 paying members as of 2021, which represents around a 54% year-over-year increase, which is fantastic to see. If we look at the overall stock price, we can see something that is unique compared to Palantir Technologies and SoFi, but not unique in a good way, and this is what I mean. So we have the initial bump in their stock price, however, we do not see a consolidation period. We see that the company actually caps out, and then from their highs, the stock price has absolutely plummeted. So we can actually see some consolidation right here. So hopefully the stock price won't fall any lower. However, that is still something that investors should keep in mind. We could see a fantastic rebound to at least around $25 per share. I also like this company because it is trading below the low-end analyst price target, which gives us a fantastic margin of safety. Also, this is a smaller cap company compared to other companies such as SoFi Technologies and Palantir Technologies. Amplitude also has very high-profile customers, which include Atlassian, Ford, Toyota, Twilio, and Taco Bell. And if you all know me, I absolutely love Twilio. It's on one of my favorite stocks to buy right now, and I did a previous video on that. So if you're looking for another fantastic company that is trading at a huge discount, feel free to research Twilio to determine if it's good for your personal portfolio. But back to Amplitude, I really like how this company has high-profile customers, and they also have a lot of customers. However, how are their revenues looking compared to their market cap? Well, currently their market cap is trading at around $2 billion, but they only brought in around $167 million worth of revenue in 2021. So this is a much smaller company. However, because this is a smaller company, we could see great stock price appreciation for this company well into the future. But again, always make sure to do your own research. Another thing I like about this company is that the company has a very high net revenue retention rate, or NRR, which is around 123%. And this percentage tells us that customers of this company spend more money over time on their products, which means not only are they retaining these customers, but the customers are so infatuated with the technologies that they actually want more, and that's really exciting to see. So this is very exciting news for long-term investors. However, why has the stock price plummeted? I don't think that this company's stock price falling is solely due to macro and geopolitical tensions, such as in the other two stocks that I talked about. For this one, it's mainly due to their earnings report, and I'll tell you why. The company's stock price has fallen around 50% since Q4 of 2021, and this happened after their earnings and their revenue growth and projections. So their future revenue growth rate for the company is set to be around 35% to 40%, which is a big decrease from the revenue growth rate that they achieved in 2021, which was around 63% year over year. So although they are still growing, they are just growing at a slower rate, and this is anticipated. However, for a smaller company, we don't want to see this revenue growth rate fall right now. We actually want to see that continuously increase. So this has scared investors enough to liquidate their positions, but I think that the stock price has fallen down to a price that is stomachable for retail investors to get a good deal on this company, but always make sure to do your own research. So a 35% to a 40% CAGR is not that bad in my opinion. Anything above 30% is what we are looking for, because that is a fantastic CAGR, especially when we are referring to revenues. And lucky for us, every company on this list either meets that 30% CAGR or exceeds that 30% CAGR from now into the future, which makes me bullish on all three of these companies, just to different degrees. So overall, I like Amplitude. I don't like it as much as I would like SoFi or Palantir Technologies, but if you see good growth potential in this particular stock, mainly due to their high-profile customers, feel free to do your own research and look further into this company and weigh the risk to reward ratios. But that's all I have for this video. Remember to go and smash that like button right now if you made it all the way to the end. Comment down below some of your favorite stocks. Subscribe if you are new, and I will see you in the next YT video.